Have you ever felt like the financial system is rigged? Like no matter how much you save, invest, or follow the rules, the money just doesn't seem to stretch as far as it used to? You're not imagining things. Most people are operating inside an economic system that's built on flawed ideas, manipulated signals, and endless interference. And while most financial advice tells you to budget better, invest earlier, or just be patient, it never addresses the root cause. Today, I'm going to walk you through a set of principles that completely changed how I see money, the economy, and financial control. It's called Austrian Economics, and it's the only economic framework that actually explains why things feel the way they do and how you can escape the trap. Now, before we dive deep, take a second to like the video, subscribe to the Privatized Banking Project, and hit the bell so you don't miss a single video. Here we expose the truth behind Wall Street, inflation, debt, and the banking system, and help you take full control of your financial future. Let's get started. Austrian economics begins with one key insight. People act, not computers, not formulas, not theoretical markets. People. You and I make decisions based on what we want, what we know, and what we believe will benefit us right now or in the future. Economies aren't driven by data. They're driven by human action. That might sound obvious, but think about what that means. It means the economy isn't something you can perfectly predict or engineer. You can't program human behavior. You can't force people to value the same thing. Every dollar you spend, every investment you make, every time you delay gratification or take a risk, that's economics in motion. So rather than treating the economy like a giant machine, Austrian economics treats it like a living ecosystem, constantly changing because of individual decisions. Let's talk about value, one of the most misunderstood concepts in all of finance. Most people think value is intrinsic. That's something that has a certain amount of value just because of how much it costs to produce, or because of its materials, or because of its label. But Austrian economics teaches us that value is subjective. It doesn't live in the product, it lives in the mind of the buyer. Let me give you an example. Imagine you're holding a bottle of water in a grocery store. You might value it at $1. But if you've been lost in the desert for 3 days, that same bottle might be worth everything you have. That bottle didn't change, you did. Your situation changed. Your value shifted. That's subjective value. And this is why prices can never be centrally controlled or set, because the value of anything, your time, a product, a service, even money itself, depends on the context of people involved in the exchange. This completely changes how we view prices. Prices aren't just numbers, they're signals. They're how the market communicates information. When prices rise, it tells producers that something is in high demand and short supply. When prices fall, it says there's too much supply or not enough demand. In a truly free market, prices help coordinate millions of decisions across the globe without anyone needing to be in charge. That's economic order without force, harmony without control. But that harmony only works when prices are real. And prices are only real when they're not manipulated by outside forces like central banks or government policy. And this brings us to one of the biggest problems in our current system: money manipulation. Let's break this down. When the Federal Reserve or any central bank prints money, it creates more dollars out of thin air. But those dollars don't represent new goods, new services, or new productivity. They just exist now. What happens when more dollars are chasing the same amount of goods? Prices rise, and not evenly. Some prices rise fast, others slow, and some people benefit, like those who receive the new money first. Others lose, like the average saver who sees their dollar buy less each year. This process is inflation, but Austrian economists define it not as rising prices, but as the expansion of the money supply beyond what the free market could create. And that inflation causes a chain reaction. Let's say interest rates are artificially lower. It suddenly looks cheaper to borrow money. So businesses take on new loans. People buy houses they can't afford. The stock market heats up. But all of this is based on a lie: the idea that there's more savings in the system than there really is. This creates what Austrian economists call malinvestment. Investments in the wrong places, for the wrong reasons. Eventually, the truth comes out. The resources aren't there. The projects can't be completed. The debt can't be sustained, and the bubbles burst. Sound familiar? That's the 2008 housing crash, the dot-com bust, the crypto collapses. It's the cycle we see over and over again: boom and bust, because of fake signals caused by central banking policies. And every time the bust hits, What does the system do? Instead of letting the correction happen, letting bad investments fail, letting the market reset, governments step in to stimulate the economy with more spending, more debt, more money printing. That doesn't fix the problem. It delays and magnifies the next crash. This is why Austrian economics is so powerful. It's not just telling you what's wrong, it's explaining why it keeps happening. Because the foundation is broken. The signals are fake, and the incentives are backwards. But it's not all doom and gloom. In fact, this understanding is what sets you free, because once you understand the truth, you can stop playing the game. So what does this mean for you? It means stop trusting manipulated markets. Stop building your financial life around debt, speculation, or artificially cheap money. Instead, start building capital that's liquid, safe, accessible, outside the Wall Street casino, and outside the control of centralized banks. This is exactly why the infinite banking concept is such a perfect fit with Austrian economics. Because instead of waiting for permission, you build your own capital. You store your wealth in a place that grows tax deferred, earns dividends, and gives you the right to borrow against it on your own terms. You become your own source of financing, just like the Austrian model encourages. Decentralized, individual-driven, voluntary exchange. And because the money is stored in a properly designed whole life policy, it's protected from market crashes, inflation shocks, and Wall Street corruption. That's not just a product, it's a philosophy. It's a strategy for a real freedom. Austrian economics teaches us that wealth isn't created by pushing buttons or manipulating data. It's created by people making voluntary, mutually beneficial choices. It's built through time, effort, value, creation, and long-term thinking. And when you combine that worldview with strategies like infinite banking, you create a financial life that's stable, sustainable, and completely in your control. If this video helped you see money and the economy a little more clearly, do me a favor, tap that like button and subscribe to the Privatized Banking Project. That's how we grow this movement and reach more people who are tired of the lies. Comment below if you want more videos breaking down Austrian concepts like the business cycle, interest rates, or subjective value. I'll read every comment, and your feedback drives this channel forward. And most importantly, remember this: if you control the banking function in your life, you control your future. Thanks for watching. I appreciate your time, your attention, and your willingness to think differently. I'll see you in the next video.